Most experts on personal finance will tell you that the secret to getting rich isn't a secret at all. Work hard, spend less than you make, and save everything you can. But the country's 1%ers might not agree. Even Warren Buffett lives a simple life, and there's no shame in it. But if you want to get rich, it helps to know these 7 secrets that the rich don't usually talk about. If you're new to the channel, hit the subscribe button and that little notification bell icon so that you don't miss out on any of our video updates. Plus, it helps us spread the Thrive Wise love to help more people thrive wisely. Now, let's begin. Number 1. Invest in yourself first. If you want to get rich, one of the most important rules you must follow is to pay yourself first. This just means that you have to be willing to save and invest a certain amount of your income every time you get paid. But this is one of the rules that most people don't follow because they don't understand how important it is. Paying yourself first can help you stay out of debt and build wealth. It can also help you be better prepared for unexpected costs and retirement. So if you're watching this video right now and you haven't been putting yourself first, it's time to start no matter how much or how little you save. You must realize that until you pay yourself first, your revenue is not your own. In other words, because your income is already devoted to paying your expenses and clearing your obligations, you must be intentional about setting aside and investing some of it each time you get a check. Until you have some money saved from your paycheck, don't spend a dime. You agree with me that you can't save anything most of the time. Once you start spending, it seems like your bills will never end. So the solution is to save first and spend later. Now let's talk about the rule that makes saving money easier. This rule is called the rule of 1% and it can be used by anyone to save more money. According to this rule, you should start saving the amount you are most comfortable with and keep adding 1% every 6 months. For example, if you earn $1,000 a month and keep $900 of it, you can start putting away any amount you feel comfortable with, and let's say that amount is $100, which is 10% of your income. After 6 months, you'd add another 1% to make it 11% of your income. The idea behind this rule is that you add to your savings slowly. You won't feel too weighed down by the extra money, but your bank account will slowly grow over time. I should also say that if you want to save more money even faster, you should increase the percentage more often or by more than 1%. Number 2. Increase your savings. Saving money is good, but it may not be the best way to get rich. If you want to get rich, you need to find ways to make your savings go further. This just means that you need to find ways to invest your savings. But before we talk about how to make your savings go further, let's quickly talk about why it's good to save money. First of all, saving money helps you be ready for emergencies. Maybe this is one of the best reasons to save money. You never know when something unexpected will happen. For example, if you have savings, it's easier to deal with a sudden job loss than if you don't. Not to mention that having savings makes you more ready to take advantage of profitable opportunities because you have the money to invest on a whim. Now, one way to make your money grow is to invest it in assets like certificates to deposit. Most regular savings accounts have low interest rates, and over time, your purchasing power could go down because of inflation. For this reason, you should only keep enough money in this type of account to pay your regular bills. You should also think about investing in the stock market with some of your savings. The stock market has always done well in the past, with an average annual return of about 10%. Investing in a real estate investment trust or buying real estate is yet another way to make your savings go further. Number 3. Embrace frugality. How much money you keep at the end of the day is more important than how much money you make. The main reason people go into debt is because they spend more than they earn. You need to be careful about how you spend your money by putting your attention on what's important and avoiding things that aren't. That means you have to know the difference between what you need and what you want. Your needs are things you can't live without, like food, clothes, and a place to sleep. You have to prioritize them and minimize spending for your wants. In other words, you need to save money. Again, being careful with your money doesn't mean you have to give up on being happy. Being frugal is actually a way to put what makes you happy first and not waste your money. So, you can take charge of your spending right now by making a budget. A budget helps you to figure out how to spend your money by letting you put the most important thing first. You would also only spend on what you have to if you could learn how to wait for what you want. Another way to keep you from spending too much is to look for sales and coupons when you shop. By doing this, you can cut down on how much you spend on your needs. You can also save money by buying things you use often in bulk. Try to save on things like your food bill that you don't do very often. If you cook at home, you could save $20 or more for every meal you make. So if you really want to get ahead financially, you should also learn to be frugal. Number 4. Protect your money. Warren Buffett says that if you want to be rich, one of the most important rules to follow is to never lose money. So another money rule you should follow is to keep your money safe. This rule about money has been followed since the beginning of time. For example, merchants don't usually spend all of their goods on a single ship. Instead, they spread their goods out over several ships to reduce losses in case something goes wrong. So you need to learn how to protect your money and lower your risk by spreading it out. So I'll tell you how to use the barbell strategy to help you spread out your investments. The barbell investment strategy says that investing in both high-risk and low-risk assets is the best way to find a balance between reward and risk. That is, instead of spreading your investments across many different assets with different risks, you just focus on the investments with the highest risk and the ones with the lowest risk. Nicholas Taleb, a well-known statistician and derivative trader, used the same method to do well during the economic shutdown of 2007 to 2008, when many of his colleagues were having trouble. This strategy is important because it helps you avoid risks that aren't obvious and gives you more control over your investment. The strategy involves putting most of your money into these safe assets and only putting a small amount at risk. You could, for example, choose to invest in riskier initial public offerings or buy technology companies and put the rest of your money into long-term bonds. And we're halfway done through the video. What do you think about these money rules? Do you agree with what has been said so far? What struck you the most? We'd love to hear about that in the comment section below as we all try to help each other out. We're thrilled to hear what you think about all of this. Also, please do hit that small like button if so far you see this video as interesting. And going back, number 5. Plan ahead. If you don't plan, you're planning to fail, says the old saying. Also, the best way to know what will happen in the future is to plan for it. Planning for the future is one of the most important things anyone can do to get rich. About 3 out of 5 people don't have a plan for when they retire, which is one reason why most people worry about money when they do. In retirement, you can relax, enjoy your investments, and take a break from all the work you've done over the years. But if you don't plan, this might not be possible. So, how do you make plans for the future? Start by putting together an emergency fund that can cover your living costs for at least 3 to 6 months. This will help you if you have to pay for something unexpected like losing your job or getting sick. Also, figure out how to pay off your mortgage and student loans as soon as you can. Then, take this video's advice and start paying yourself first. Remember that the sooner you start investing and saving, the better. Another important step in planning for retirement is figuring out how much money you'll need to live on. First, you should figure out how much it costs to live each year and save at least 25 times that amount. You can save more than 25 times your annual living costs if you want to retire early. Invest in a 401k plan that your employer offers or put money in an individual retirement account. If you make your plans for the future, you won't have to worry about money. Number 6. Make your house an asset. I'm sure that up until now, you've always thought that your home is your best asset. However, a home is usually a liability. According to its definition, an asset is anything that makes you money, and a liability is anything that costs you money. So you should be able to tell by now whether your house is an asset or a liability. In his book Rich Dad Poor Dad, best-selling author Robert Kiyosaki said that most people's homes are a liability. He said that your house shouldn't be considered an asset if it doesn't make you money. The only way most people can make money from their house is to sell it after living there for a long time. But he said that a property's value isn't always going to go up. And I think the financial crisis of 2007 and 2008 proved this point. Tony Robbins, an entrepreneur and best-selling author, also said that owning a home might not be the best investment if you don't think about how it could help you to make more money. He also said that owning a home may be good for your mind and heart, but it's not the best thing to do if you're not making money. So if you want your house to be an asset, you should find a way to make it earn more money than it costs you by investing in rental properties. Remember that a liability costs you money and an asset makes you money. Number 7. Never stop learning. And finally in this video, the last rule for getting rich is to keep moving up. One thing that the richest people in the world have in common is that they read a lot. They keep learning and growing, which is why they have more money than the rest of the world. Also, technology is changing so quickly that you have to keep learning to keep up. How much money you can make depends on how much information you have. You might need to go back to school to get an extra degree or take a professional course. You can also use sites like YouTube to improve your skills and learn new things. No matter what level you are right now, never stop learning. Well, that's basically the 7 money rules that rich people won't tell you. And thank you guys so much for watching today's video. And hey, it seems like YouTube thinks that the next video can completely transform your financial situation. Watch it and find out whether they're correct. And please don't forget to click the subscribe button to see more videos on how to thrive wisely. Till next time.